The financial landscape is undergoing a seismic shift, with blockchain technology emerging as a powerful force reshaping the industry. Initially synonymous with cryptocurrencies like Bitcoin, blockchain has transcended its roots to become a disruptive force in traditional finance. In this video, we explore the profound impact of blockchain on the financial services sector, examining its applications, benefits, and the challenges it presents. Understanding blockchain technology. Blockchain, at its core, is a decentralized ledger system that enables secure, transparent, and immutable record-keeping. Transactions are recorded in blocks, cryptographically linked in a chain, distributed across a network of nodes. This distributed nature eliminates the need for intermediaries, ensuring trust and transparency in peer-to-peer transactions. Key features of blockchain in finance. Advantages of blockchain in finance. In the financial services industry, blockchain has numerous advantages that have the potential to revolutionize traditional systems. Let's explore some of the key benefits of using blockchain in finance. 1. Enhanced security. Blockchain's cryptographic architecture ensures robust security, making it highly resistant to fraud and unauthorized access. Each transaction is encrypted and linked to the previous one, therefore creating an unalterable chain of records. The blockchain's decentralized design eliminates a single point of failure, making it difficult for malicious individuals to corrupt the whole network. This increased security fosters confidence among participants, lowering the likelihood of data breaches and cyber attacks. 2. Transparency and immutability. The transparency of the blockchain allows all network participants to view and verify transactions in real time. Once a transaction is recorded on the blockchain, it becomes immutable, meaning it cannot be altered or deleted. This feature enhances accountability and trust as all parties have access to the same version of the truth. In financial operations, such as auditing and compliance, accessing a tamper-proof, transparent ledger streamlines processes and reduces the need for extensive manual verification. 3. Improved efficiency. Blockchain significantly streamlines financial processes, leading to faster and more efficient operations. Traditional financial systems often involve intermediaries, which introduce delays and higher costs. With blockchain, intermediaries are minimized and peer-to-peer transactions are facilitated, eliminating the need for third-party verification and authorization. The autonomous execution of smart contracts speeds up operations like settlements even more, since contractual terms self-execute when predetermined circumstances are satisfied. 4. Cost savings. By reducing the involvement of intermediaries and automating processes, blockchain enables substantial cost savings for financial institutions. Transactions over the blockchain are typically more cost-effective, bypassing intermediary fees and operational expenses. Additionally, the streamlined and automated nature of blockchain-powered financial systems reduces the need for manual interventions, leading to overall cost reductions. 5. Global accessibility. Blockchain is not confined by geographical boundaries, providing global accessibility to financial services. Traditional banking systems often exclude individuals without access to banking facilities, especially in remote or underserved regions. With blockchain-based solutions, anyone with internet access can participate in financial activities, empowering the unbanked and underbanked populations to access various financial services. 6. Enhanced cross-border transactions. Cross-border transactions are often subject to lengthy processing times and high fees due to involvement from multiple intermediaries and different regulatory requirements. Blockchain's decentralized and borderless nature streamlines cross-border transactions, reducing settlement times and costs. This benefit is particularly advantageous for international trade and remittances, promoting faster and more affordable global commerce. 7. Data integrity and privacy. Blockchain's data integrity ensures that records are accurate and reliable. Since data is encrypted and linked in a chain, it is protected from unauthorized alterations or deletions. This level of data integrity strengthens financial compliance and reporting, promoting a higher level of trust among stakeholders. Furthermore, blockchain allows for selective disclosure of information, enabling users to maintain control over their data and privacy. Blockchain technology has the ability to completely alter the financial services industry by increasing security, transparency, and efficiency. Its capacity to automate procedures like payments, settlements, and transactions streamlines operations, lowers costs, and allows for worldwide access to financial services. As technology evolves and becomes more widely used, its effect on finance is expected to grow even stronger, paving the way for a more inclusive, safe, and efficient financial future. Disrupting traditional banking. Blockchain technology is reshaping the banking sector by challenging traditional norms and offering innovative alternatives. Its ability to reduce costs and remove intermediaries is a key disruption. Blockchain's decentralized structure facilitates direct peer-to-peer transactions, cutting out banks and payment processors. This disintermediation lowers transaction costs, making financial services more accessible. Automation via smart contracts on blockchain reduces operational expenses and errors, leading to faster settlements, especially in cross-border transactions. Combining blockchain with artificial intelligence, AI, enhances operational efficiency. AI algorithms analyze data for credit assessments, fraud detection, and personalized experiences. AI training programs equip finance professionals to leverage these technologies effectively. With reduced costs and improved security, financial institutions offer tailored, secure solutions, driving innovation and efficiency. Embracing blockchain ensures competitiveness and delivers cost-effective, customer-centric services, shaping the future of finance. Cross-border payments. Cross-border payments have long been plagued by inefficiencies, high costs, and long processing times. Blockchain solutions offer a transformative alternative, facilitating instant, low-cost transactions across borders. By leveraging cryptocurrencies or stablecoins, individuals and businesses can conduct cross-border transactions without the need for traditional banking intermediaries. Trade finance. Blockchain streamlines trade finance processes, including letter of credit, bill of lading, and supply chain financing. By digitizing and automating these processes, blockchain reduces paperwork, accelerates transaction times, and minimizes the risk of fraud. Smart contracts enable automated execution of trade agreements, ensuring compliance and efficiency throughout the supply chain. Capital markets. Blockchain has the potential to revolutionize capital markets by enhancing transparency, liquidity, and accessibility. Security token offerings, STOs, tokenize traditional assets such as stocks, bonds, and real estate, enabling fractional ownership and global trading. Moreover, blockchain-based platforms provide real-time settlement, reducing counterparty risk and increasing market efficiency. Identity verification. Blockchain-based identity verification solutions offer a secure and decentralized means of verifying individuals' identities. By storing encrypted identity data on the blockchain, users can maintain control over their personal information while granting selective access to authorized parties. This eliminates the need for centralized identity verification authorities, reducing the risk of data breaches and identity theft. Future outlook. Blockchain's future in financial services is bright, with decentralized finance, DeFi, platforms disrupting traditional banking and investment. As these platforms expand, attracting users with lower costs and greater autonomy, central bank digital currencies, CBDCs, are emerging, aiming to enhance payment systems and cross-border transactions. Tokenizing real-world assets like real estate diversifies investments. Blockchain and supply chain management boosts transparency and efficiency, reducing fraud and delays. Additionally, blockchain strengthens identity management and data protection, empowering users with secure transactions. The financial industry is poised for transformation as blockchain evolves, offering more inclusive and secure systems through ongoing innovation and collaboration. Challenges and considerations. Despite its immense potential, blockchain adoption in the financial services industry faces several challenges. Regulatory uncertainty, scalability limitations, interoperability issues, and privacy concerns are among the key hurdles that must be addressed to realize blockchain's full potential. Moreover, transitioning from legacy systems to blockchain-based solutions requires significant investment in infrastructure, education, and regulatory compliance. Blockchain technology represents a paradigm shift in the financial services industry, offering unparalleled transparency, security, and efficiency. From cross-border payments to trade finance and capital markets, blockchain is poised to revolutionize every facet of finance. While challenges remain, the benefits of embracing blockchain are undeniable. As financial institutions continue to explore and implement blockchain solutions, the industry's transformation into a more inclusive, efficient, and resilient ecosystem is inevitable. We reached the end of this video. If you enjoyed this video and found it helpful, don't forget to leave a like and subscribe for more content.